Hello, this is Maria Bezubova, and you're at my channel, Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz! Today I'm very excited to open to you the new topic, which is extremely important in any operation related to global trade or global shipment. This is insurance. Unfortunately, we live now through the times which were not seen in the world already for many, many years, when insecurity becomes a new norm and hotbeds of new conflicts start here and there almost every day. And when a war that Russia started against Ukraine is raging in the heart of the European continent. How to make international business work in these circumstances? How to move goods? Insuring a cargo is a must if you use any financial instrument for your international trading deal. So how this insurance works in the face of all these new challenges? In order to answer these and many more questions, I am happy to host today a very, very interesting guest, Ellis Morley, Associate Director Cargo and Commodities at Howden, global insurance and reinsurance brokers, underwriters, and risk consultants. I'm delighted to welcome you, Ellis, and thank you very much for joining me today.
Hi, Maria. Yeah, thanks for having me. I'm really happy to be on your podcast today, your show today, rather. To introduce myself, hi, I'm Ellis Morley. I'm Associate Director at Howden Insurance Brokers. I work on global cargo, stock throughput and commodities business, including war insurance, cargo insurance, and various other lines of business to do with the global supply chain. Currently, in my team, we do a lot of business in the Middle East, and we do a lot of business in Ukraine and the Black Sea, among our other emerging risk areas, and then just our day-to-day areas, including Europe, Middle East, and Africa, which I focus on, and then my colleagues focus on the US, South America, and we've got a presence in Asia as well. So we're truly a global broking firm now with 18,000 employees, headquartered in London, offering a whole range of insurance and risk management services to our clients.
Perfect. Thank you very much again for joining me. And that's exactly why I decided to ask you for the interview, because your work is related to war risks management. And obviously now we live in the world which was always full of risks and dangers, but currently at this point in history, it becomes even more dangerous, I would say. However, world hasn't stopped or become less global. And the life is going on, the trade and shipment is going on, so these risks need to be mitigated somehow. And so my first question to you would be how the insurance market first reacted at these new significant global insecurities, like war in Ukraine, problem with Houthis in the Red Sea, and related threats. So what was the first reaction?
That's a great question. The insurance market has always managed emerging risks, especially I'd say London market is well known for managing emerging risks. I go back a couple of years ago to when Russia invaded Ukraine back in 2022, and we had the grain corridor which closed, where Ukraine, I think, is the third or fourth largest producer of grains and soft commodities. Obviously there was a massive outcry from the global community, not only because of what was going on in the country, but also because of the inability for Ukraine to be able to export their goods. So Howden and markets that we work with worked on the grain corridor, which enabled shipments to go in and out through the active war zone of the Black Sea, and to export grains out from Ukraine and onto the rest of the world. So we still work on those bases today. That was emerging product a couple of years ago. We still deal with those shipments, I would say weekly, sometimes even daily, where we're supplying from traders coming out of the Black Sea, going into anywhere in the world. But at the moment, one of our common routes is from the Black Sea into East Africa. So where we've got this critical food supply going into East Africa and then sort of into Central Africa, whereby they need access to this essential supply coming out of Ukraine. They now encompass two war zones on the route. So we have the Black Sea, which is obviously still very much an active war zone. We saw recently that Ukraine have stepped up with their drone warfare and have managed to push the Russian fleet back quite significantly. But even still, there is an active war zone going on from both sides. So there's a big threat to shipping, including limpet mines floating in the sea, including underwater drones, surface drones, air drones, surface-to-air missiles. I can go on. There's plenty of risks to shipping in the Black Sea, and so then we have that to manage, which then we also have the Red Sea involved. We launched a insurance product, a market leading product back in February, I believe it was, to cover vessels, cargoes and vessels going through the Red Sea to protect against missile strikes, drone strikes, seizures of vessels, capture, etc. All the associated war risks for areas from the south of Red Sea, around Yemen, down past Somalia. So that large area that would be categorized by the JWC, the Joint War Committee, as the high risk area at the time when the Houthis started attacking. I think that was something like 200 days ago at time we speak. And in that time, almost 100 vessels have been targeted. We've had two or three that have been sunk, multiple have been hit. So the Red Sea is very much a hot topic at the moment and a really dangerous passage, both for ships and cargoes, but for most importantly for mariners. We're seeing the potential loss to life, and we unfortunately have had a couple of casualties during the conflict from unmanned explosive drones. So what we try to do is offer an insurance offset. We don't have so where we go back. Sorry, we go back to the route from the Ukraine. So we load cargoes out from the Ukraine, and we cover the cargoes loading out from the Ukraine in the Black Sea, and then all the way through the Red Sea and onto their final destination. And so that gives these ship owners a bit of peace of mind, gives the cargo owners a bit of peace of mind, and enables that supply chain to carry on flowing. I would say Howden, along with the markets we work with, are constantly innovating with new products. So we actually this week have launched a war on land product for within Ukraine. So we deal with some commodity traders that were exporting goods out of Ukraine or importing goods into Ukraine, and the issue we saw was from to Odessa or from Odessa, the inland section was not covered by the insurance market. And so there was a large values of fertilizers or grains or wheats going across the country on trucks being loaded to or from the port that were not benefiting from the financial service of insurance, which then obviously enables the owners of those goods to sleep easy and to know that if there were a Russian missile to hit their truck full of all their goods, they're not going to run out, they're not going to lose their business. We're able to pay the claim out. So working with some Lloyd's markets and some London markets, we have launched a new product to cover the truck routes, so then we can link up the supply chain more completely. But that's another example of Howden using insurance of force for good and the insurance market reacting to significant global insecurities, even such as the Ukraine, which has been going on now for longer than we'd like it to, obviously.
Indeed. Just a small comment from my side. A couple of days ago, like 2 days ago, there was another hit close to Ismail port, which is now one of the largest exporting ports for wheat, and it happened exactly what you're telling. A couple of trucks were hit. So if they would be able to have, the shippers would be able to have insurance.
Yeah, and that's the real difficulty. If the ports have got some real issues with risk transfer. Once it's on the vessel, generally they're insured by the global market. But for those traders that that are losing their shipments, losing their values because they're still on the truck and they're being hit going into Ismail, that's a real financial hit for them. It's a real loss, and that's what we're trying to mitigate.
Exactly. Unfortunately, we see that these dangers, they do not stop, they do not come to an end, or they will come, but we don't know when. So this evolves with time. And
Yeah.
how do you think this your products of your company, or in general insurance products, will also evolve with these risks? Do you see any other things that can be done to make the global trade move?
So we're always trying to evolve to manage new risks and to manage existing risks, and really we like to work with our clients and with the international community. So where we deal with more of the traders business, we like to speak to traders and get an understanding of what are the risks that keep you up at night? What are the risks that really you can see? And then we want to be consultative and see if we can manage them. Obviously, we can't manage every risk, but the more risks we can manage for our clients, then the better position we put them in to succeed, the better position they're going to be in any instability, and that's what we always try to do with these two war products I've just mentioned. They're both innovations that have only come out in the last, well, the Ukraine war on land is very new for us in the last week. The Red Sea war facility was in the last sort of four months, maybe 5 months. We're constantly looking ahead, and we're looking at new innovations. We've got some others that I can't mention at the moment, but we've constantly got product development going. But it's not development for the sake of it. We work with clients, we work with stakeholders that we already speak to, because we want to solve problems that really matter. And that's where we position ourselves. It's about using the product, and we don't want to make something if a client's not going to use it. We want to provide risk management where it is really required, and we want to be on the front line of that.
I see, indeed. And which type of additional war risk-related insurance in general exist? I'm quite a rookie in that, so
Okay.
maybe this question.
So we have the traditional the war insurances. So we have the hull war insurance and the cargo war insurance, which represent both the hull and the cargo vessels going through dangerous areas. So as I previously mentioned, the Black Sea and the Red Sea. There's two types that involved there. One covers the ship owner, and one represents the cargo owner or the trader, depending on who's involved. We also, where we do the war on land, that would fall more into a cargo product market, but it's an entirely different product. And that's the trucking cover for the goods carried across the land. We also work with our political violence and terrorism teams. So we've quoted some business in Lebanon recently, where there's some tanks storing goods in Lebanon, and so we've quoted to protect against political instability, which obviously with the Israeli conflict going on at the moment, that's quite a challenging risk and something that we're taking on board. And then outside of that, we have things like piracy, which still very much affects. We can talk about the Houthis, we can talk about the Black Sea, but there is still a piracy risk out of Somalia. There's piracy risks out of the Gulf of Guinea in West Africa, and then also some in Asia. Actually, a couple of incidents happened recently near in Southeast Asia, China Sea near Singapore. So there's the piracy risks, and then there's the kidnap and ransom side. So there's a whole range of different product lines in our market that can help to offset war-related risks, and that's where that's why that looks like, I would say.
I see. Thank you. How the cost of operations changed for all involved parties? Obviously, there are a lot of risk that needs to be covered, and these are definitely additional costs which were not taken in account before that. So what are those additional costs to your understanding? How much parties will need to pay?
So if we use the Red Sea as an example, the costs, which I think has been discussed potentially by one of your previous guests, actually, the costs involved include things like additional bunker costs, additional crewing costs. Things take longer. So if we took a route from China to somewhere in the Med, that they decided to go round the south, round the Cape, to avoid the Houthis and avoid the Red Sea conflict. So if we take that example, by going round the Cape, we're adding another 10 days to 2 weeks of the voyage time. We add extra bunker costs. And on the back of extra bunker costs comes extra environmental impact, which is something that no shipping company wants to bear, and the world doesn't need. So we have not just 2 weeks more of bunkering, we have that associated environmental cost. We also have the cost of the vessel hire. We have the cost of the crew. Any cargoes that are potentially time sensitive, so maybe soft commodity cargoes, 2 weeks longer could make a difference to the quality of the product that arrives. So that's the cost of avoiding this conflict area around the Red Sea. But then the cost of going through, we obviously have the significant threat to life, which is not something that we can value. And so that alone makes it very difficult. But then if there are cargoes that are time sensitive and there are routes, if this route needs to be run, then rather than a shipping company and a trader taking the risk on themselves, the insurance cost is relatively very low for that route. It will be considerably cheaper than the bunkering costs of going round, which is, we're still seeing a lot of vessels go through there. According to Lloyd's list, I think it's still in the 900 vessels a month or something were going through last month, I believe, which is still significant. We've dropped. We are above 50% from where we were pre-conflict. At one point, it dropped to below. We're still significantly down. We've seen the Suez Port Authority discuss discounts on vessels going through. So then the Suez cost is another factor. In reality, as you're well aware, with global shipping and global commodity supply chains, there's so many costs here. It's always difficult to map these out. And so we like to make our costs as achievable as possible. So then we're not a factor into whether you take this route or take this route. We want to be almost an invisible infrastructure behind the ship owners and the cargo owners to enable them to just transit around their business as usual. And so the Red Sea is one example of that, but that's more of a global thoroughfare. Whereas when we talk about the Black Sea, obviously you don't have the luxury of choice. If the cost to not loading goods out of Odessa, for example, would be a waste of all the supply that can be produced from Ukraine, all of the goods being exported, the cost of not going in while it's a dangerous area would be enormous. There would be food wasted that's required by the developing world. All of the production that can be exported would not be realized, and it would ultimately not benefit the economy that is absolutely needed right now in the Ukraine. So we can talk about actual costs, when then there's obviously the insurance cost, there's extra crew costs, there's extra vessel costs for going in there into the Black Sea, but then the costs of not doing that voyage can be much wider reaching.
Indeed, yes, indeed. For Ukraine, definitely true. Is there any difference in terms of calculation of this additional tariff for different goods, like, I don't know, for example, like for crops and for the fertilizers, or there is exactly the same way that insurance is being tariffed?
So for general cargo insurance, then there'll be different risks associated with different products. So, for example, oil won't go bad if you leave it in the tank for a while. A crude oil has been sat underground for millions of years. It can sit in a tank, whereas crops, grain and wheat, they can't do that. They'll go moldy, they'll turn to sludge, and they'll be unusable and a waste. So yeah, there are different factors when you talk about cargo insurance, and we measure those carefully, and we use our markets, and we've got a team of experts here in London. We've got a team in Geneva, Dubai, Singapore, represent all of the commodity hubs around the world, and we analyze the risks per commodity type. So yes, there are different costs involved and there are different risks involved. But when we're talking about the war side, the risk is very much the same. So we don't judge based on the type of the product. When we're talking about cargo war coverage, we just look at the region you're going through, because a missile or a drone strike is indiscriminate. It won't matter what's on board. If it's been hit, it's been hit. And that's something that we want to make sure we're protecting against, regardless of whether you're shipping soy or whether you're shipping fertilizers or whether you're shipping oil or whether you're shipping steel.
I see. So which factors should the insured party take into account when choosing which type of the insurance, of additional war insurance, to actually bear? Because as you mentioned, there are some of them.
Yeah, well, so insurance is quite a complicated landscape. So, I mean, I would always advise parties involved speak to a broker. Would be my main advice. If you have the goods moving, I would say that you should speak to a broker that can deal with that insurance for you. The costs will be borne by the market. Any good broker will be able to increase your coverage and actually provide the product that you need for that route and for those goods. But if you talk about specific factors, the factors that a potential insured party should take into account would be the geographical factors of where they're going. So are you going through any of these high risk areas? What goods you're transporting, because different goods, as I mentioned, have different risk factors. And then also things like how you're transporting the goods. If you've got goods in a container, generally it's more protected than if their goods are shipped open bulk. And if you've got goods, different types of goods have where they have different risk factors, we have metrics for how risk is calculated, and we work on those metrics every day with a wide team and a large market. So it's hard to give a very sort of succinct answer to that, I'm afraid. I would say the best advice would be to speak to a broker who can act on your behalf in terms of the market, because there's a big market out there, not just in London, not just in Europe, but all across the world. There are specialist insurance firms that will be looking to help with your risk transfer in exchange for premium.
Indeed, fully agree. How does the insurance industry in general foresee the development during, let's say, short-term future and maybe medium-term future? Do you, as an industry, see that the risks that you're trying to meet will develop more or less? So, what is your evaluation?
It's really hard to look into a sort of, without the crystal ball. It's very hard to give an estimate of what these unstable regions will do. I think the point is there will likely always be instability in the world, and so as an industry, we try and provide some stability for those unstable regions. So where there will always be an element of war or conflict, if we have a working market, then we should be able to offset those risks, even in a particularly unstable, choppy environment. So that's the ultimate goal. I think trying to predict when conflicts will be ending could go badly. So I don't want to make any predictions as to the conflicts ending.
I see. Thank you. Ellis, you mentioned to me previously, and I would like to ask you to elaborate a little bit more on that, about this new insurance product for Ukraine, inland Ukrainian shipments that you mentioned. So can you please explain in more details how it works? So let me first explain how the shipment process works from our end, from the way we see it from the Ukrainian side. So there is a farmer which has, let's say, a truck of a crop, which he has sold to some trader in the port. A trader in the port is gathering together a vessel. However, the farmer is taking his truck to this port by himself. So in this case, how and who should approach you as at Howden and ask for which type of insurance? So is it a farmer who has to come directly to you and to do it separately, or the trader? So how it works?
So the way this works is whoever will take ownership of the goods for that overland transit. So my understanding from what you just said is the farmer takes the risk on the way to the port, which is something the farmer really will struggle to bear. If that truck gets hit by a strike or a missile or a drone while on the way to port, then that's going to be a real financial cost for farmer. I mean, let alone a real risk to him and to him as well. But what we do there is we cover the transit of the goods from the farm to the port, and then as part of our wider war product offering, we then can cover the goods from the port onwards out to the rest of the world. So at the moment, the part of that chain that isn't currently covered is the overland transit from the farm to the port, and that's where we offer a product that we can offer up to a $3 million cover per truck shipment. So that's more than enough per truck that we found to cover from the farm in Ukraine to the port, to say Odessa or wherever they're loading, and we can insure that cargo from there. So we can work with either the farmers or we can work with the traders. We can work with whomever is the party responsible for getting those goods to that port. And we would love to work with more and help more farmers and help more traders to get more goods out of Ukraine and to the rest of the world. And that's what the product is for. We've got a specialist team in London that deal with these war declarations, and that's the team I'm a part of. You'd contact us, and I'll give my contact details to you, Maria, so then we can pass that on to any interested watchers or listeners. And then you can contact us, and we can give you a price for ensuring the total shipment value going from the farm to the port. And then we can also cover it onwards, but from my understanding, it's the farmer's responsibility until it gets to the port. So we can cover that length of the voyage, which then enables that farmer to really have peace of mind while they're on route. They're not worried about losing an entire crop to a risk that's out of their control.
Exactly. I think it is a very, very important and up-to-date product that you did, because we just started the harvesting campaign a couple of weeks ago. It's going very actively, and we will have quite a lot of goods to ship from Ukraine this year.
Exactly.
Thankfully. So I think it's a very, very up-to-date product.
I'm glad to hear that it's been a good harvest this year so far, and hopefully that continues. And we want to make sure that we're here to help, so that all the hardworking farmers aren't losing that excellent harvest that they're having.
Exactly. And one more final question, perhaps in terms of specification of how this insurance works. So from the farmer to the port, we have this inland new product that you have, and then starts the usual insurance that you usually provide, right? From the port.
So once the goods are loaded onto the vessel from the truck, then we can cover this. The maritime war cover that we mentioned at the start, where we cover the Black Sea, we can cover the Red Sea, and we can cover the entirety of the voyage, really, from wherever the goods are being sold from, out of Odessa port, or whichever port they're loading into. So once the goods have been loaded onto the vessel, then yes, then it would apply to the marine war cover. But the first leg of the voyage is really the bit that at the moment is the scariest bit and the most interesting for the farmers and the people that really live within Ukraine still. That's where the risk is still being held by them, and that's where we want to help them get that risk off of their chests, and we want to take that risk off them.
Indeed. Thank you very much. I think it was a very, very helpful discussion for me, definitely, and I'm sure for our listeners as well.
Thank you very much for having me on, Maria. It's been a great talking to you.
Thank you. I will leave all the credentials of Howden and of yourself below this video, so that our interested parties can contact you directly, and I would ask everyone, of course, to contact you. Thank you again, and I wish you a lot of success with your usual products, with your new products, but of course I wish all of us less dangers, more securities, and less risks, obviously, for all of us. Peace to all of us. So thank you, Ellis, again.
Thank you for watching. Please let me know in the comments if you would like to make a deep dive into the topic of the insurance. I will be very glad to do it and to discuss it with Ellis and Howden again. Please subscribe to the channel, put like to this video, push the bell in order not to miss any updates, and see you soon.